Hi guys, how you all doing? I hope Lishapo, and yeah, this is going to be our second chat for today. Remember, on Sundays usually I give you, analysis on what you can expect, in the next 5 days, right? So if you're new here, make sure that you subscribe and you hit the bell icon. Already, I gave you something that we have never done on this channel, which was step index. It was someone in the comment section requested that. So now we are going to move on to the second chart. And if you're interested in the mentorship or learning this style of trading, you can just leave a comment or contact me on Telegram, and then I will get back to you. So let's get started. So this is some of the drawings that we had before. So we always start with the highest time frame so that you check the bigger picture, just to know and check if there's anything new there. So we've been talking about this being our support on monthly, and this being our area of resistance. So from here we can see that the price is too close or is at resistance on monthly. So meaning that if you've been getting trades to go long, and if you've been holding long trades from the support all the way until the resistance, it's time to exit now, because the price has hit a very strong area of resistance. We are not saying that if you exit, the price is going to do something like that. No, we're just saying that because of where we are located, we don't have to predict that this is going to be broken. It's a very strong area of resistance, so the price can still play around here before breaking it, right? So all you have to do is to make sure that you take your profits and let the market decides on what it wants to do from here. Then based on that, you can then search for new trades. And so you don't have to the market giving you a certain amount and then you be like, I know it's going to break that area of resistance, because if you go like that, it's going to disappoint you. You just have to take your profits. If it breaks, you can look for new areas of support, then you can join that movement to the upside. If it gets rejected, you can look for opportunities to the downside. So it all depends on the market, what the market is showing you. All that we need to know from this is that the market moved from the support, it has hit the resistance. We need to be careful now. We can't be taking any trades to the upside, at least if you're trading the higher time frames. But judging on the location where we are currently going long, it's not something that is good long term. So let's check if there's anything on weekly. On weekly, if you still remember, there was a time when the price was moving down, and this was your nice area. This was your nice bearish trend line, this one here. And from this area of support, the price broke it. This was our area of resistance at the time. You see why I'm saying when you hit those higher time frame areas of resistance or support, you just exit. We are not saying the price has to go all the way down. We are just saying this is a very sensitive area. From here, anything is possible, which is why when you hit that, you are out. In this case, the price got rejected and it went here before going up and breaking that area of what? Of resistance. When that happened, it means this is no longer your area of resistance. It doesn't exist anymore. That's when you move up to that one there. This is your area of what? Of resistance, the new area of resistance. But now, because of what happened here in between, we had this as our area of support, but because of what we did there, we can say this is our nearest area of what? Of support. You see? And you can also, one thing that we can take from this is that the price last week, it gave us what? Bearish rejection at areas of resistance. So it shows that the bulls were trying to push up, but the bears forced them to go down, which is why you have that long tail above, because the bears were pushing to the downside. So that's something that you need to take note of, and which is why I'm saying if you're still getting looking for trades to go long, it's no longer a good idea judging on the price action on this weekly and also on monthly, and also again the location. We're too close to areas of resistance, so going long is no longer a good idea. So let's see what's happening on daily, if there's anything different on daily. On daily, we do have we hit this as our area of what? Let's just draw it and see if it was broken or not, as our area of resistance. So always you must mark your level below and your level above. This was broken, so which means you shift up to that as your nearest area of what? Of resistance. Yes, there's your nearest area of resistance. But because of what? We are inside monthly, we've hit monthly resistance. So this area of resistance on daily is inside what? A monthly resistance. So meaning the price can turn from here, or it can still go there and turn. We're not saying it's gonna do that. We don't know how far it's gonna go. We're just saying the way it is right now is very sensitive. It can still be rejected, right? So that being the area of resistance, where is our nearest area of support? Is the one that is currently being hit. That's your area of support. So if you're trading smaller time frames, maybe you can get trades to go long, but you don't have to hold them for too long. Because of what? The more you're holding for too long, you're going to interfere with the structure on higher time frames, and the structure on higher time frames currently doesn't agree with what you continue to take trades to the upside. So when you're getting trades here, make sure that it's not something that you're gonna hold for a very long time. So let's just mark that. You need to make sure that if you get your trades on smaller time frames, you must also use a smaller time frame to set your take profits. You can't take an M15 trade and then say I'm gonna exit at the next monthly area of resistance, because now it means you are skipping a lot of areas of of resistance in between, the ones that belong to your time frame and also the slightly higher time frame than the one you're trading. So you can have this as your what? As your bullish trend line. So the bullish trend line is hit and area of support is hit. So let's see if you won't get any reason to go long there on your smaller time frame, but it's not a very high odd type of a trade, not at all. And this was what the price it paused there before coming down. So if you get reasons to go long there, you don't have to exit, saying I'm targeting, I'm going to hold for 10 days, so I'm going to hold for 3 months. It's possible, but you don't have to do that. You don't have to do that. So let's go down to, this is what daily. Let's see what's happening on H4. On H4, it's either you have this as your trend line. Yes, you can have it there, or you can have it here, depending on whether you view this as a pause or as a swing. But regardless, the bullish trend line is broken, and an area of support, which is this one, is broken. So which means this time frame is sort of bearish, and it also has a lower low, and which means it has a bearish trend line. We can put a bearish trend line somewhere there. There's your bearish trend line, and that being the bearish trend line, this becomes what? The nearest area of resistance on this time frame, and this becomes the nearest area of support on this time frame. But as much as we can say we are inside the daily, and I said you can look for trades, but they shouldn't be for long term. You'll be targeting structures like this. You just get and then exit there, because you don't want to end up interfering with that bearishness that we saw on weekly and daily and monthly. You just want to be in and out. In and out. You don't have to waste time. You just go in and out. That's it. So, but another thing that you need to be worried about is this type of price action, because the price is approaching what? Support. All right. When you're approaching a support, if you want to give me a rejection candlestick so that you convince me that, because we know that a support is a zone of the buyers, it's a bullish zone kind of an area, so it's a buyer's territory. So when you want to convince me that the buyers are coming in, you must give me a bullish rejection candlestick, not a bearish one, because this and this, they mean two different things. So you don't want this one at a place where you were expecting this. It will mean something else, because here it shows that we hit the daily area of what? Of support. The price was trying to, it was a kind of rejected, but it comes back, it closes a pin bar. They try to go up, the bulls, they come back, close as a pin bar. This here, it's not good when it forms as a support, because these sellers that are pushing down and leaving those tails, they can end up pushing all the way down and taking out the zone, which means when you're looking for trades here, you need to be very careful. So maybe you can put a horizontal line here just to mark the area of support on this time frame, somewhere around there. I just used this is your H4 area of support. So maybe if the price was to come inside there, maybe it will give you the ones that you want, which is the bullish ones, and you get trades to go long. When you're going long, make sure that you target what this trend line as your TP, because it is still holding. The time frame is to the downside. It's just that we hit a higher time frame trend line, a higher time frame zone, which is what a support that belongs to daily. So which is why you can say maybe you look for trades that you can, like intraday type of kind of trades. So when you get them, you don't have to hold for too long. You'll be exiting around the trend line. So that's basically what you can expect from this one. But based on this, you need to be careful when you're searching for trades, because the price can just come and do that, right? And because of what, remember, even on the higher time frames, we said you're what, reacting from monthly resistance. So you need to be careful when you're searching for trades here. You need to be very, very careful. But around there, just look for any rejections. Maybe you can get trades to go to just there. When you get there, you are out. If it continues, it's fine. Maybe you can get this as your sort of a retest or more confirmed type of an entry. But all I'm saying is that when you get the trades, don't stay in for too long. You're doing what you call it's an intraday type of trading, so you don't have to put a stop loss that looks like it was taken on a day. Like you're trading, if I'm trading a daily zone, if I'm trading this, then I'm gonna use daily to set my TPs, which means I'll be targeting maybe a daily bearish trend line or a daily area of resistance to set my take profits. But I cannot use M15 as my entry time frame and then use daily to set my take profits, because there will be a lot of structures in between before we can hit that, and those structures, they either belong to the time frame that I executed on, or the ones higher, maybe H1, H4, until you get to daily. So you cannot neglect those. You can't do that. So you need to make sure that when you set up your take profits, you set them based on the structure on the time frame that you used to execute. So now from here, in conclusion, we can say that, this one, just to conclude, we can say that on monthly, we have hit the monthly resistance. So meaning if you're trading higher time frames or for long term swing type of trades, it's no longer a good idea for you to continue buying, because the location doesn't allow you to do that. It doesn't, because of what? It has hit a higher time frame resistance. And when we moved to weekly, what did we find on weekly? I can't remember. Yes, on weekly, another thing that we have is that after hitting that monthly area of what resistance, we had a weekly bearish rejection candlestick. But remember, with this type of a candlestick, when you have a bearish one, and we say that more confirmation will be the price coming lower than this and not going higher than that, because if it goes higher than that, it's like this rejection candlestick never even happened. It was never even there, which is why we preferred the thing to give us a bearish rejection candlestick, and then go with the momentum and continue and break the range of that candlestick. Then the bears will have convinced us. So that's all that we have here, and you need to understand that here the support is there. So what did we have on daily? On daily, the price is coming down and it's hitting an area of support, and it's just that here the zone that we had there was broken, and it was broken by a move from the very same support. This support is the one that gave us this move up and broke the area of resistance that we had from there, which means this area of support is kind of strong, which is why we were saying we can search for intraday type of trades from that zone. But if you get reasons to go long, make sure that you don't have to say I'm going long and then I'm going to exit at that one. because of where you are located. So you need to make sure that you'll be targeting anywhere around there. It's more than enough, because you just need to have at least 2:1 in terms of the risk to reward ratio. Then you are fine. You don't have to try and push your luck. That's you being greedy there, because you can end up, imagine the price it gives you a buy, you can take a buy, it's supposed to exit there based on the structure here. You end up trying to push it all the way up, and then it does this. You are going to be very frustrated and be like, why didn't I close here? Because when I was planning the trade, I said I was going to exit here. So that's why you shouldn't be greedy. You shouldn't be greedy. Make sure that the time frame that you use to execute is the same time frame that you're going to use to set your take profits. If you are making 3 times what you were risking, that's progress. That's progress. You don't have to make 20:1 the ratio. Yes, it's possible, but you don't have to do that, because it means now you are holding for a longer time. You have got there's a risk of price pulling back and then taking a profit and stuff like that. It's very much possible, but for as long as you are making such decisions based on what the structure on the chart that you are trading, then it's fine. You can get your 20:1 risk to reward. So what I'm saying is that when the market opens, because of what it did here on Friday, we don't trust it. We are just saying, let's see how it's gonna react to this. Let's see how it's going, what type of candlestick is gonna give us there. If it gives us the ones that would allow us to go in, then we would just go and do what, and execute, and then we are targeting that. Then TP hit. That's if you get trades around there. That's if it gives you candlesticks that are sort of showing you that the bulls are kind of coming in. Then you can do that. All right, so that's all that you can expect from US 30 or the Dow Jones. Yes, I'll see you guys in the next video. Sharp, sharp.